Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. Let's just dive in. And let's start off with this tweet here, because it is pretty comical. We do see Jim Cramer says the collapse of First Republic Bank, FRC, could mark the end of the banking crisis. Wow. Where have we heard this before? Oh yeah, that's right. Going all the way back to 2008 when Jim Cramer said, oh, everything is all fine in the banking world. You know, history doesn't always repeat, it rhymes. I've said this time and time again on this channel. To me personally, I think that this is just the beginning. I've been talking about it and I've been warning you guys all about how this is going to be worse than 2008. I've also said since the beginning of the banking collapse back in March that this was going to continue to spiral out of control. What I personally love about all of this is that Ripple currently is in a battle with the SEC. We have seen regulators and also higher ups around the government entities talking about how crypto is a scam. Crypto is, it's all a rug pull. You're going to lose all your money in crypto. These are major banks. These are regional banks losing massive amounts of money overnight. Individuals are getting wiped out on some of these stocks. Yet again, we don't see regulators talking about stocks. We don't see regulators talking about the banking collapse. All we see regulators doing and talking about is how crypto is one big scam. Have you ever noticed why they're saying that? Look at the charts of some of these cryptos compared to the charts of some of these banking stocks. Crypto so far has been resilient compared to the overall banking collapse. And I've talked about this many times on this channel as well. I do believe that the macro is going to be very bullish for crypto. I think it's going to put a lot of attention and a spotlight on crypto as a safe haven for individuals to not only hold their capital, but retain their value for their capital as well. Who wants to hold money in a bank? Banks currently right now are not safe. Also, you are losing money year over year with inflation. It's out of control right now. And the banks are in panic mode. I'm telling you that right now. And they are broke. They are completely broke. But let's talk about something that's very interesting about this. Jim Cramer talks to 380,000 nightly viewers. How insane is that? That is 380,000 individuals that get wrecked every single night. I question on how does he even have 380,000 viewers? It's insane to me. It's absolutely insane to me. And I strongly suggest that if anyone is watching Jim Cramer, if anyone is watching Mad Money, or even CNBC, when Jim Cramer talks, do the complete opposite. Because so far, in verse Cramer, they have been spot on. Spot on. It's been insane. But with all of this, let's talk about the banking collapse. Let's talk about why it is going to get a lot worse. And it goes all back to the movie The Big Short. If you guys watched The Big Short, you already know about CDS, aka credit default swaps. I actually talked about this back in March. We were discussing it because something got posted. I'm going to talk to you guys a little bit about it. For those that don't know what credit default swaps are, well, here's Lynette from ITM Trading discussing it. We do see what did Lynette just say at the end of this video. It's a little comical of a video, but it's spot on. Listen closely.
A CDS is a credit default swap, which is a derivative product which serves as a form of, you could call it insurance, but if you think somebody's going to default, you're going to buy a credit default swap. 1 year Treasury credit default swaps have hiked to the highest level ever. What is that telling us about the safety and security of the U.S. government? Well, traders think it's poo-poo. What do you think? A CD.
So yeah, I mean, as we really kind of look at the safety and security of our government financially, even the banks, right? We just recently seen the Treasury come out and the Federal Reserve come out and say, you don't need to panic. Everything is fine. U.S. liquidity is strong. The banks are strong. And it's comical to me because we know that the FDIC has well under about $200 billion in reserves. They're not going to bail out the small guys. They're not going to bail out you or me. What they're going to do is actually bail in the banks, utilizing your money. That's right. If you have money in the bank, no matter what you have, it could be $10, it could be $10 million. It is getting bailed in to cover the banks. And a lot of people think I'm crazy for saying that, but please look it up. Look it up. The FDIC invoked the role after 2008. And it's a big and it's a serious thing, especially for anyone that is utilizing banks right now. But yes, CDS, credit default swaps, they are hitting the highest point ever. And it means that traders are seeing that there's a major weakness within the financial system, especially around the banks. They see that the banks are broke. They see that the banks are weak. And it's for good measure. Like, this is why they are loading up on CDSs. And the craziest thing that I seen around these credit default swaps, which was a big warning sign, and I even said it back in March, was this. CNBC, credit default swap data removed from multiple banks. How insane is this? This was March 27th. Check this out. So here you have from CNBC, credit default swap data. This is a little bit of a meme. And then over here, we do see from their actual website, look at, they were getting rid of CDS. And one of the major ones that we were discussing at this time was Deutsche Bank. Deutsche Bank was a big one that was actually seeing a major rise in CDS. That one didn't get removed, but there was a few. They started to remove a few banks. I'm pretty sure after this, we've seen JP Morgan get removed. I'm not too sure on that, but I know that it started to get removed in terms of data around CDS, which was a big warning sign. And then guess what we've seen? Well, we've seen collapses happening. And what's crazy to me is that I've been telling you guys to watch the major banks, right? This is the industry over on TradingView. For everyone that wants to go to this, you go to tradingview.com, you go to markets, you go to stocks, and then within stocks, you can actually go to sector and industry. And then what you want to choose is either one, major banks. I personally have two. I have major banks and regional banks chosen. And I just watch these and I look at them. And it's crazy because if we actually look at these, so you can see the performance on 1 year. So in 1 year, a lot of these stocks have lost well over double-digit figures. If you were holding these stocks for well over a year, you are probably hurting quite a bit. And these are some of the major banks out there. These are the largest banks out there. And you can scroll through all of these and look at what it's been like in terms of like the performance in the last 3 months, 6 months, year to date, and even 1 year. I've been watching a lot of these, but where you will really see the pain is the regional banks. Over here is where you see the regional banks, and this is the performance 1 year. And you see Silvergate down 98, almost 99%. First Republic Bank, obviously down 97, 98%. Now, yes, a lot of these banks did get bailed out, and it's crazy because the FDIC, we know that they only have well under like $200 billion in reserves. To be, coming in and saving the day, which is insane. But there's so many other ones here as well. And you can see all of them. I mean, like, this is not, this is a warning sign. This is a warning sign to get your money out of the banks. The banks are not your friend right now. They are not your friend. They were never your friend. They bet against you every step of the way while throwing you back pennies. And it's crazy to me that we still have this society built on the fact that like these banks are strong and they're secure and they're, safe. It's just not the truth. It's not the truth. And what's crazy is like, if you actually look at the 1 day, you could see some of the banks that are losing the most. Obviously, yes, FRC, First Republic Bank, if you will, FRC, is one of the ones that are losing the most, obviously, right now as it does collapse. But there is so many other banks to watch here. And I've been watching these over the last couple of weeks. And I've been warning you all to watch these because this is what's going to tell you ahead of time of what's to come. And what's crazier about all of this is that we see the quote around this and saying, oh, the banking system is stable. We constantly see that coming from the regulators, coming from, those in power, especially the Treasury and the Fed. But this is the truth of the matter. Like, look at the banks that collapsed over the last 60 days. These are some of the largest banks out there. It's insane to me. And also, we do see 3 of the 4 largest bank failures of all time have happened in the past 2 months. Washington Mutual amount is adjusted for inflation. The banking issues are not over, and the Fed is hiking rates. Largest U.S. bank failures of all time. First Washington Mutual, $386 billion. Second, First Republic, $233 billion. SVB, $209 billion. Signature Bank, $118 billion. Three of these have occurred in the last 2 months. And it's crazy that we are at this point right now. But is it really, that unbelievable when we have the financial system is breaking down due to rising rates, or interest rates, despite the consequences? Some individuals on television, including Janet Yellen, say this is good as it will help central banks fight inflation. When I hear this, I wonder what planet these people are on. This is also the same individual that wants to print another $18 trillion within the next 7 years. And you honestly think that fiat is going to make you rich? Absolutely not. Absolutely not. You are going to hold your money in a bank and you are going to lose a massive amount of it because of inflation. And I mean hyperinflation. It is on its way. And I want to leave you guys off in this video with a video actually from Peter. So what do you see? 5 weeks ago, Janet Yellen said the banking system is sound. First Republic Bank failed on Friday. And here we have First Republic bites the dust. This is from Peter. Listen closely to this 4-minute almost long video, and then I'll wrap things up.
Bank crashes are back. Just 5 weeks ago, Janet Yellen gave a speech amid fears of regional banks collapsing, where she said, quote, "The situation is stabilizing and the U.S. banking system remains sound." The New York Post characterized it as, quote, "drooling happy talk." And yes, it turns out Janet lied. Yesterday, the FDIC said it will take over one of the largest regional banks in America in preparation for a bailout, followed by a fire sale to a mega bank. For those following along at home, this makes 5 major banks vanished in 50 days: Silicon Valley Bank, Silvergate, Signature, Credit Suisse, and now First Republic. So what happened to First Republic? Well, they're going through a concentrated version of what all U.S. banks are going through: reckless Fed hikes that gutted their bond portfolios while driving businesses to bankruptcy. That's actually the Fed's stated goal, to crush jobs in order to counteract the inflation that it created. So the loans go bad while the bonds are melting. In First Republic's case, those losses were big enough to scare depositors, who pulled $100 billion out. That's over half of First Republic's deposits. At which point, a cartel of major banks parachuted in $30 billion, and First Republic announced emergency borrowings from the Fed and Treasury, meaning from you, whether you like it or not. But it wasn't nearly enough. Earnings this week showed First Republic is done, unable to service those loans, and the stock plunged, going from $115 a month ago to $2.33 late last night, barely worth a Pentagon toilet. One major analyst guessed First Republic had a negative value of $14 billion, meaning that they owe $14 billion more than they had. So what's next for First Republic? At this point, it looks like FDIC will orchestrate a takeover, probably guarantee all the depositors, especially that $30 billion line from the major banks who expect a return on their lobbying dollar. Then the bailed out remnant gets sold to a mega bank. At the moment, the most likely are JP Morgan, the biggest bank in America, and PNC, the 6th biggest. So another one bites the dust, absorbed into the too big to fail Borg. Now, what's next for the rest of us? Lawrence Lepard had a great tweet laying out the hidden losses across the U.S. banking system, concluding that the entire system is in danger and we could get to the Fed effectively becoming the FDIC, funded, of course, with the only song that the Fed knows, that $1 trillion money printer. The big picture here is that about $17 trillion in bank deposits in America are guaranteed by roughly $100 billion in the FDIC. So that's about 0.6%. Just nobody overpromises like the federal government overpromises. So if losses do exceed 0.6%, given the Treasury is currently already spending down its couch cushion money to evade the debt ceiling, it then falls to the Fed to run all of the bailouts, using the only tool it has, your dollar. You pay more for groceries and rent, but by Jiminy, no banker and no millionaire is left behind. If that is the end game here, then Jerome Powell's job-crushing, economy-gutting, bank loan disemboweling rate hikes will have all been for nothing, canceled out with a fat dollop of banker bailout. A betting man would say that is exactly what's next. Okay, we'll be watching. See you next time.
And did you catch what he said there? $16 trillion in the banking sector, covered by $100 billion with the FDIC. Yep, there's really nothing like overpromising of the federal government. And that's what they always do. And they always let you down. Because guess what? They don't care about you. They don't care about those that are not extremely wealthy, because those are always going to be the ones that get bailed out. Just like 2008. 2008, the wealthy got bailed out, while, well, guess what? The poor got screwed. And that's the same old story. It's the same old story. It happens every single time. And that's what's going to happen here as well. You know, it really is sickening. But this is why we pull our money out of the bank. This is why we get our money out of the bank. We put it into hard, tangible assets like gold and silver. And I mean physical gold and silver, not digital. But also we invest into digital assets that are decentralized, that have utility. Utility gems are going to be the ones that really gain a lot of momentum. I do think that, you know, Bitcoin, for the most part, I kind of don't hold Bitcoin. I'm just going to be honest with you guys. I don't hold Bitcoin. I'm a huge holder of utility gems. I love Casper. I love HBAR. I love XRP. I love, you know, digital assets. I love crypto. But I do hold quite a bit of physical gold and silver. And also, I've been stockpiling tangible items. I think tangible items is a crucial thing to look at right now. Food, water. A lot of people think I'm crazy for saying that, but when hyperinflation comes and things skyrocket, well, those that haven't prepared are going to be the ones that are sitting there saying, wow, I wish I knew ahead of time what was going to be happening. And guess what? I'm sitting here telling you that this is going to get a lot worse. And those that will pay the price are going to be the ones that are not extremely rich, that are not wealthy, that are, you know, sitting there struggling, you know, living paycheck to paycheck, or at least, guess what? You're living just a normal life. You're not living well beyond your means, and you do have some money stockpiled away. But guess what? That money that's stockpiled away in the bank, it's not your money. And also, it's not there. So we need to make sure that we are preparing accordingly. So with all of that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or a beautiful night, wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.